All right, so here's a good one. What impacts your credit score or how to hack your credit score? Same thing. You understand what impacts your credit score, you can make better decisions and make amazing decisions to to improve your credit score in a reasonably timely fashion. First of all, I'm Charles Davis. Like and subscribe. Thank you very much for stopping by. Let's get to this. So as you can see by this chart, on the left is a giant stack of money, which is totally boss. And people who have a lot of money can affect their credit more so than people who don't. So that's one of the things that you might have to deal with. So what impacts your credit score? This is a pie chart equaling 100%. Total debt, so the amount of debt that you have sitting on your credit report has a 30% effect on your on your credit score. Meaning the more debt you have, the worse your credit score might be. Depends on the type of debt, depends how you use the debt, depends how you leverage the debt, but 30% of your total debt is taken into consideration on your credit score. Payment history, this is a big one. You'll notice it's the largest piece of the pie at 35%, meaning that your credit score is reflective of your ability to pay your bills in a timely fashion. 35% of paying your bills in a timely fashion go towards a consideration where your credit score should be. 10% is new credit. So anytime you open up new credit, can affect your credit score up, can affect your credit score down. Credit mix. Credit bureaus like to see a difference. Don't have just credit cards. Don't have just car loans. Don't have just mortgage loans. Have a good mix of healthy credit, and you can have an amazing credit score. And the length of your credit history is 15% over time. So if you are 18 and you're just starting out, you are at a disadvantage in our current system regarding credit scores because you are not going to have a lot of credit history. So straight away, you're going to be dragged down by 15%. Your credit mix, being younger, might only be one credit card, which means your total debt is impacted and which your credit mix is impacted. And if you just got that 3 months ago, your payment history is impacted because you don't have a long history with your credit score. So how do you do things? How do you fix your credit score? How do you hack your credit score? Well, it's really easy to hack your credit score. The thing that is most important for your credit score is keep your total debt as a percentage of the available credit for a line. So let's for save a credit card, and that credit card has a $4,000 limit. Don't run it all the way up to $4,000 on the credit card. Keep it at around 30%. That is going to give you the most healthy debt ratio on that particular credit card. So it'd be that. Pay your bills on time. You don't have to pay them off every month. Matter of fact, you can float it a little bit, make the minimum payment on a regular basis. That keeps improving your score because it shows you're using your credit score responsibly. And again, credit scoring is all about responsibility. Do you have the responsibility to pay back your debts? The more that the credit bureaus are comfortable with you paying back your debt, the better your score will be, the easier it will be for you to get credit. The best time to get credit is when you don't need it. If you need it, bad time. So know in advance. So before you start the process of whatever you want to acquire, a new car, a new house, a new boat, anything that you're going to use for credit, take a step back first. Understand where you sit in your credit world. There are a lot of services out there will give you a credit score-ish, like a Credit Karma, Credit Sesame, etc. For the purposes of a mortgage, those credit scores are never accurate, but they do reflect trends properly. So if you sign up for a Credit Karma account today and it tells you your credit score is at 600 as an example, and for the purposes of the mortgage credit score will probably be less than that. But the trend over time will probably be accurate. So if in 4 months of working really hard on your credit score in Credit Karma goes from a 600 to a 675, more than likely your mortgage credit score will have gone up by 75 points as well, somewhere in that neighborhood, because it is reflective of the trends. So rules of thumb, very important, pay your bills. If you can't pay your bills, don't take on new debt. That's the important thing. If you're looking at buying a new home, don't go out and get a new car and a new boat and a credit card at a furniture store to do that, or at a hardware store to be able to buy your appliances. Don't do that until you close on your mortgage, or do that way in advance to let that improvement to your credit profile take effect. 6 months or a year in advance. I mean, you want to have a long period of time. Again, payment history, length of credit, between those two straight away, 50% of your credit score is based off those two. So if you apply for a mortgage today and last week you opened up 3 new credit card accounts, that's going to drag down your length of credit history because it's an average of all of your debt. It's going to show up as new credit. So those credit pulls take a hit against your debt. It's going to show up in new debt, which is going to impact your credit score. And depending on what you applied for, it may or may not help your credit mix. Maybe you have 5 credit cards and you applied for 2 more. Well, that's great. You've got 7 credit cards, but they're all credit cards. No difference between them. So that's going to pull your credit down. And again, if they're new, there will be no payment history, and that will drag down your score as well. So really, the most important thing to remember, when thinking about your credit score, it is time and responsibility. That's it. That is all your credit score is. If over time you are responsible with the credit that you were given, your credit score will go up 100% of the time, almost guaranteed, if you do that. If, however, you take out credit and don't pay it, and there's defaults or collections, things along those lines, those will drag your credit score down in a hurry, and they will keep it down. So again, time and responsibility. Do well with your credit. Know what your goals are in life, and put this to work for you, because you can impact your credit score. So Charles, you talked about hacking my credit score. How can I hack my credit score? Well, it's actually pretty easy if you want to do it in, like, let's say 90 days. That's a good hack period to do some serious improvement to your credit score. So pay down your debt on the credit score. If all your credit cards are maxed out, pay them all down so that they have no more than 30% of the available credit used at any given time. Make all your payments in time, 100%. If you're younger and you don't have a long credit history, one of the things you might be able to do is, if you have a spouse, or if you have a significant other, or if you have a family member who has good credit and is willing to help you out, they could potentially add you to one of their credit lines, like a credit card, and your credit average will now take into consideration their credit average. It's not when you got added to that account, it's that you're added to an account that has a long lifespan. That helps you out. Credit mix, that's just one thing that time also fixes. If you only have credit cards right now, at some point you're going to need to buy a car, or buy something else that you can get a variety of credit types sitting on your credit score. And again, new credit, just be cautious. Don't try to do everything at once. Patience, time, and responsibility are your best friends to be successful in having a great credit score. Thanks a lot. My name is Charles. Like and subscribe, and good luck. If you have any other questions, post them down below. I will read the comments, and I will respond to you and see what we can do to improve things in the future. Have a great day.